My name is Laura Atkins. I'm the marketing manager at RKLE Solutions. Thanks everybody who's on the call for joining us today. Our session will be presented in partnership with Avalara, and we're going to cover the impact of South Dakota v. Wayfair on sales tax compliance. Today, Tom B. Miller from Avalara will be our presenter. He is a founding Avalara employee and has worked in various capacities in channel development, API, connector and e-com sales, customer loyalty, and strategic alliances. Tom works really closely with RKL and our clients to maximize your investment in Sage Tax Solutions. And also your RKL reps are Gia Lane, Mike Scher, Lindsay Palladino, and Min Tram. So don't hesitate to reach out to them if you have any questions about your Sage solution. So we can go ahead and get started, Tom.
Well, thank you, Laura. I'm excited to be here. Thanks for the nice introduction. And I want to thank everybody who's online with us today for the time they're giving us. I have a lot of content to cover. I hope you find it valuable and hope it meets all your needs. Let me first say that we have been strategic partners with RKLE Solutions for many years. They are one of our best partners. I'm proud to be working with them on this project. So today we're going to be talking about Supreme Court case of South Dakota versus Wayfair, and there's a lot of background that goes into that. So I think probably the best thing to do is let's take a couple of minutes just to level set, make sure we're all on the same page. I'd like to talk about some of the different sales tax requirements, what makes it complex, and then what happened when they layered the Wayfair decision in on top of it, and how that impacts you, and exactly what happened with the Supreme Court, what they did. As part of that discussion, we'll be talking about a brand new consideration of Nexus, economic Nexus. You'll hear that phrase a number of times today. We'll talk about things you can be doing to ensure compliance and what you need to be thinking about. And we'll talk a little bit about a solution that we humbly think is great and gonna take care of those issues for you. So this whole thing shouldn't even take an hour. We should be in good shape. I hope that if I cover all of those topics, I hit your objectives for the session. If not, please use the chat box so that Laura knows what we need to do. She can be directing me along the way. And if you have specific questions, bring those up at any time, and we'll try to address them either as part of the discussion or during the Q&A, which there's going to be plenty of time for later on. So, given all that, let's start off in talking about sales tax, about what makes it so complex and why it's important. Well, the important part of it is probably the easier question to answer. So let's address that first. It's important because there's a ton of risk involved with sales tax. You've got, when you sell product, you have sales taxes that you have to collect. There's a lot of risk there. But when you're buying product to consume as a company, you very likely may be liable for the flip side of the sales tax coin, that being use tax. And there's some risks there. The risks on both sides are pretty much the same. When you're buying, one risk is that you can overpay the taxes in areas where either the supplier made a mistake, their systems weren't correct, or maybe you could have used your exemption certificate and not been liable for the sales tax payment. Or you can underpay your taxes if they don't charge you the correct amount. And that's one area really where state auditors recently have been focused on, because it's really up to you to assess the tax that's due on purchases and make sure that you report and remit correctly. So they're going to be looking there. On the sales tax side of the coin, you have the same risks. I mean, you can undercharge your customers, which, in some cases might make them pretty happy, but you're still responsible to submit the correct amount at the end of each taxing period. The difference between what you collect and what you remit can only come from one place. That can come from net profit, and that's not a good position to be in. The other side is that you can overcharge your customers. Now, in that case, you're going to run the risk of creating negative customer satisfaction and you still need to remit to the states the full amount that you collected. And the customers can't go back to the states to get a refund, so they need to come to you for the refund. So that generates more work within your ERP system. Don't worry about it. There's a whole industry out there to help with reverse audits that are going to help you identify the overpayment of taxes. Generally, they'll charge you a percentage of the savings that they're able to generate for you. So we think automation is more efficient and probably a little bit cheaper. So let's talk about sales tax, and maybe we should take a step back first. Understand, sales tax has been important for a long time across many civilizations. You might not be aware of this, but sales taxes helped to build the ancient pyramids and all the roads for the Roman Empire. As for us, well, I'm sure you've heard and you probably remember the Boston Tea Party and the Stamp Act. Those were all about transaction taxes, sales taxes. It's so important that it's a statutory requirement, and it's a major source of revenue for all the states. And this is a very big pie. The pie is huge because 47% of all state revenue comes from sales and use taxes. Now, as the U.S. economy has been growing pretty significantly over the last couple of years, at any rate, state sales tax collections have lagged, and there's billions of dollars that have been lost due to uncollected tax. We know that most of the states have been operating in the red for years, so they're getting more aggressive in writing Nexus laws, sales tax exemptions, and auditing procedures. They're looking for ways to increase revenue and collections, and that includes changing laws that are going to tighten Nexus obligations, and they're putting pressure on business in the form of increased audits. Economic Nexus is just one of those ways. Last year alone, there was over $23 billion in uncollected sales and use taxes across all the states, and of that number, 13 billion was just on economic sales. That, according to a November 2017 report by the Government Accountability Office. Uncollected tax in California was over $4 billion alone, and in New York it was just south of $2 billion. So there's a lot at stake. Now, clearly, those numbers are not going to be enough to balance any of the states' budgets, but the numbers are big enough that it does go a step forward for the states, and they don't want to lose any of it. But the reality is companies view sales tax in a different manner. There's one of three ways you can treat it. You can either fight it, or you can get compliant, or you can take a head in the sand approach and hope you don't get audited. So why is that? Well, because sales tax is hard. Sales tax is so hard that 42% of the accountants surveyed would rather get a root canal than go through an audit or try to work out a Rubik's Cube. Almost 3/4 of the accountants that Wakefield interviewed said that understanding sales tax compliance is one of the most confusing and most difficult parts of their job. So it's real important. And most companies, when they're talking about sales tax and sales tax compliance, they focus on calculating the tax. Specifically, they're focused on getting the right rate. But rates are really just the tip of the iceberg. Sales tax brings a number of additional challenges. Number one, to do it right, you need to know where you have Nexus. That means you need to know in which states you're required to collect and remit the sales tax. And there's over 16,000 taxing jurisdictions across the country. You need to know which one or which ones of those jurisdictions your customers are in. And then you need to know in which states your products are taxed and how in certain situations. So for instance, if you ship out, a system, everything's bundled and it's one line item on the invoice, the office system, you might call it, that has one tax ramification. But if you break out all the line items might have different taxing methods. You also have to deal with tax holidays and a number of different things to think about. And if you're doing business to business, you're not on the hook for collecting and remitting the tax, but you need to provide exemption certificates to prove why you didn't collect the tax. That's a whole other environment all unto itself. And then after all that's done, every month or quarter, you need to prepare and file the state tax and the local tax returns. And you need to be ready for an auditor with the reports and the information that they're going to be looking for. So let's take just a moment as we level set to look at some of these challenges. So the first question really to answer is, where do you have the obligation to collect tax in the first place? And that's a concept called Nexus. And that's an issue that addresses the question that any state under their laws can declare that you have enough of a business presence in the state so that they can force you to become a tax collector for them. Now that's pretty straightforward, but each state has its own rules for establishing Nexus. And those rules go well beyond the more traditional physical presence that we've all come to recognize. Now, tightening the rules for Nexus obligations is a major trend that the states are using to address the loss of tax revenues, particularly those due to out-of-state e-commerce sales. States are generally going to look at your location of your facilities, your sales and service people, where they are in the state, the product that you sell, whether it's rented or leased, or if you're renting or leasing product there, and then activity within the states like sales visits or trainings, implementations, sometimes trade shows. They'll also consider any inventory that's located in the state and affiliate sellers. So if you have people in states selling for you, that's something that could trigger the Nexus obligations. Now, many states today are beginning the argument that companies who are able to generate revenue without any physical connection to the state still enjoy the benefits and the protections offered by the state to other businesses. Therefore, they should be required to support the benefits through the collections and the remittance of sales tax. So they've come up with all sorts of different rules that are going to trigger Nexus. You know, the things we've talked about, but they've also come up with affiliate Nexus. There's even a couple of states out there talking about something called cookie Nexus. And economic Nexus is just another approach that they're taking. We're going to talk about this in a couple of minutes, but the concept argues that by selling some number of dollars of revenue or some specific number of sales over some specific period in that state creates Nexus. I'll give you an example. The Nebraska legislature recently introduced a bill. It requires sellers with sales greater than $25,000 or 200 transactions to collect and remit the sales tax. Now, they gave you an out. If the seller refuses to collect the tax, that's okay with them, but you've got to notify your Nebraska purchasers that sales or use tax is probably due. You need to send a notification to those buyers by January 31st showing the total amount that they paid to you. And then by March 1st, you need to file a report with the Department of Revenue out there listing your buyers and how much you sold them. So it gets to be real complex. The Nexus challenge is really just the tip, just the first part below the waters on the iceberg. So when you understand where you have Nexus, the next question is understanding which tax jurisdictions your customers are in. And that can be even a bigger problem. There's over 150 million addresses. Most of them fall into multiple taxing jurisdictions, and there's, like I said, 16,000 of those. You've got tens of thousands of different rates by the time you figure it all out, millions of exemptions, and thousands of changes every year. Almost at any moment, about 20% of the jurisdictional boundaries of the tax jurisdictions are going to be changed. Now, this kind of peaks after election season because the states are looking to drive new revenue without introducing, quote, new taxes, and doing it in such a way that in a couple of years when the election comes up, nobody really remembers it. But if you're selling into all the 50 states, how are you supposed to keep up with all that? And how can you keep track of it? Well, The traditional method really has been to rely on zip codes. You find a zip code for the ship to address. You apply an average tax rate for that zip code. But zip codes and tax rates really don't have anything in common with each other. Zip codes were created to get mail efficiently from one place to another. Taxing jurisdictions were created to raise revenue in such a way that the politician gets reelected in the next cycle. So let's look at just a couple of different zip codes from the state of Colorado. Colored areas are going to represent the taxing jurisdictions, and you can see they don't align with the zip codes at all. But let's dive a little bit deeper. In just one zip code, you're going to see nine different tax rates. So if you're to use one rate for the entire zip code, you might be close, but you can't possibly be accurate. And the question to an auditor then becomes, is close enough good enough? And likely not. So zip codes clearly can't uniquely identify a taxing jurisdiction, and the use of a zip code based system or rates table is going to lead to errors. You really need to use the full mailing address to be able to pinpoint all of the different jurisdictions that apply at any specific place. So where have we come from? We figured out where we had to collect the tax. We figured out where our customers were. And now we come to the product taxability challenge, where different product categories are going to fall under different rules. And there's thousands of those different rules that's impossible to keep track of. The taxability laws change regularly, so it's essential that you as the seller know what's taxable in each jurisdiction to prevent exposure when you come in under audit. Taxability laws, as you might have figured out by now, like everything else sales tax related, they're not consistent across state lines. So what can be taxable in one state could be exempt in another. And you need to know what's not taxable in order to avoid overcharging your customers. Give you an example of that. I live in the Philadelphia suburbs in Pennsylvania, and I know when I buy a suit, it is a fully taxable event. When I go across the river to New Jersey, it's tax exempt. So I can buy it over there a little bit cheaper. But if I buy that suit when I'm doing a trade show in Manhattan, the first $90 is taxable. And if I travel up to Boston for a trade show there and I buy the suit, and in that state, everything's taxable above $150. So it gets real complex from state to state. We generally recommend a taxability review on your products and services, especially if you're adding new products, new services, or moving into new markets. And here's just a couple of examples of how things are treated differently within the state. I like that one in Indiana. Can you tell me why Nestle's Crunch is taxable in Indiana, but Kit Kat and Twix are not? I mean, they sit right next to each other at the counter at the checkout stand by the cash register. We all call it candy, but yet Nestle's Crunch is taxable and the others aren't. The reason for that is because Kit Kat and Twix contain flour. So the state of Indiana says anything that has flour is a food product. And if it's a food product, it's a necessity and therefore shouldn't come in under the sales tax laws, where Nestle's Crunch is taxable because it's candy. And there's thousands of these kinds of examples that I've come across in the last 15 years. So there's a number of industries that are going to be real complex. You should be aware of it. If you're selling hardware or software or digital goods, or if you're in the services environment, where you sell medical devices or equipment, food and beverage, clothing, school products, or dietary supplements, you've got more rules wrapped around your inventory than you could even imagine. It's just unbelievable how complex it can be. So we know where we have to collect the tax, we know where our customers are, and we know what's taxable everywhere in the business. If you're doing business to business type business, exemption certificates are required, Because in that environment, it's not about collecting and remitting the tax. It's about proving why you didn't. And most companies that I work with overlook the importance of that requirement. And when you think about it, exemption certificates really are the same thing as cash. Missing just one could cost you thousands of dollars in an audit. And missing, out of date, and incorrect certificates are the first thing that the auditor is going to look for. Now, the problem here is that they're difficult to get. I'm lucky enough to have had a 30-year career in sales, and I loved it. Nothing is more fun for me than coming back to the office with a contract with a signature on it. Nothing is more frustrating for me than having somebody from sales operations come back and say, we can't take your order because you didn't get a sales tax exemption certificate. Then I need to run back to the company. The whole process really only adds friction to the sales process. And it's important that you collect them, but it's not urgent. So it's not a priority. The urgency is to get the business in the door. And then after we get it, employees really are very rarely trained on how to validate them properly. An invalid certificate is just as good as not having a certificate at all. So it's a time-consuming, difficult issue that has multiple storing methods. So I go into companies and I kind of look over their systems, and I've rifled through filing cabinets. I've looked at hard drives. I've looked at servers. They've got stuff all over the place. And in one case, I had a company, I was going through their accordion file. Somebody submitted a copy of a driver's license, and that was accepted as a tax exemption form. So all of this needs to be pulled together. And when you consider that the look back period on an average audit can be 3 years or more, you need to know where all these things are stored in case the auditor wants to see it. So, some auditor might come in and say, oh, I need to see the exemption certificate for the ABC company from 4 years ago. Well, what goes through your mind is, well, 4 years ago was 2 predecessors ago. Where was that person keeping the exemption forms, and how can I go look for it? So you need to make sure that you want to have an efficient way to be able to tie all of that together. Then after all that's done, at the end of the month or the quarter, whatever your taxing periods are in those different states, you have to reconcile, you have to pay the bill. And that's, you're going to start off with a filing calendar. The returns are all generally due on the 20th of the following month. So you stress about e-file and payment processes, filing deadlines, county and city reporting, and local filing in the home rule states. All that data normally needs to be aggregated from multiple systems. So you might have a Sage system in the corporate office, but you might have a sister company that's running some other system, or maybe they've got something that's homegrown. You might have 3 or 4 different kinds of websites. So you've got sales and sales tax data all over across a number of different systems. And it's a challenge to be able to pull all of this together, get it down into a spreadsheet, and then figure out what form it goes on so you can get it out to the state. So you spend a lot of time doing that. And then when it's over, the state is always going to have questions for you. You're always going to get an email that says, can you explain what went into the number on line 38B or something? So you've got to reply on time to avoid penalties. So you spend a lot of time building systems to try to avoid this in the future. It takes a lot of time, and it doesn't bring the company any value. There's other projects that the accounting department could be working on that actually do bring some value. Preparation and filing is not a revenue generating activity. It doesn't improve your sales competitiveness, and it takes time away from other strategic projects. And then the final challenge that we all deal with is you got to be ready for the audit. The question really is, how quickly and accurately can you respond to the request to keep the audit to a short period that'll keep the cost of the audit down. So With all of that, the Wakefield Group found that 52% of accounting and technical professionals agree that completing a marathon would be easier to accomplish than understanding sales tax rules. So here's some more stats from the Wakefield Group. And on top of these, over half of the professionals surveyed had missing or inaccurate documents, or they couldn't produce the correct documentation that was requested by a state auditor. So they said that the average time that it takes to update their tax compliance processes is about 6 months. So let's think about it. Almost half of the companies haven't looked at their processes recently. Most expect they're going to pay penalties and fines, and it's going to take more than 6 months to get it right. And during that time, the inaccuracies continue, so the cost in the future gets higher. Companies pay a lot of money to stay compliant. That doesn't make a lot of sense. So let's check out how much an audit can cost a company. Just in time spent for the preparation of the audit, back payments, penalties, and interest, it can get to be pretty significant. It's not an inexpensive ordeal, but you do need to be prepared for it as a selling company. So that's where we came from. And then in June, this happened. Remember a few slides ago, I mentioned that states recently began trying to use something called economic nexus as a way around the physical presence rules. Now, let's talk about that just a little bit. Economic nexus, excuse me, is a new way for states to impose a tax collection obligation on you. It's going to be based on revenue or your sales activity in the state. And unlike physical presence, it's based entirely on revenue, transaction volume, or both. And as you'd expect with all things sales tax, economic nexus criteria and thresholds vary from state to state. So some states are going to look at sales last year, some are going to look at sales in the previous 4 quarters, and some are going to want to look at sales over a rolling 12-month period. This is just another layer of complexity that you have to deal with. So the question is, who's affected? Well, in South Dakota, as in most states, all remote sellers, both online and offline, who are not registered to collect tax and who meet the threshold requirements will need to concede Nexus and begin the collection and the remittance of the sales tax. Now, South Dakota hasn't yet determined their effective date. They haven't said when this law is going to go into effect, but many states already have adapted the law. I think the most important takeaway here, really, when you get down to it, is that the physical presence rule was overturned, but it didn't go away. So all the previous rules regarding nexus and presence, they're all maintained. Economic nexus is just another layer on top of it. Makes things more complex. It makes it easier for the states to collect an already existing tax. Now, South Dakota was the first to get permission from the court. Boy, was that a slip of the tongue. But several other states are following their lead with similar rules. Now, here's a visual overview. Actually, I'll tell you what. Let me escape out of here and see if I've got this page up in my browser, and it's a little bit easier to look at in the browser than on my PowerPoint. I just need to find it here. Okay, so here's a visual representation of economic nexus. This was as of October 4th, and this changes regularly. We stay on top of this. We'll talk in just a moment about changes that are coming up. But you can see on this map that every state that is colored in blue has passed legislation of one level or another to follow the economic nexus rulings. Now, the keys here are what's important. So for instance, if you look at South Dakota, you can see South Dakota is in blue, so there's an economic nexus law. It also taxes marketplace sales like Amazon, Wayfair, and some other, marketplace type sales. It has a tax for that requires non-collecting sellers to report, and it's also a streamlined sales tax state. So in Georgia, you have much the same thing. Georgia has an affiliate or a click-through nexus. It also has the tax for non-collecting sellers and is a streamlined sales tax state. So it gets real complex from state to state to state. The reason that I wanted to show you this page is because it's a really good place on our website for you to begin the research that's going to be necessary as you look for compliance. You can get here by going to Avalara.com under the resource section. Just click on the South Dakota versus Wayfair link, and that'll bring you to this page. There are a number of different things on the page, some questions, FAQs, things that you'll want to know, the map. What's kind of neat is that for every state, it'll tell you what the effective date was for Economic Nexus, as well as some other information, and if there's other remote seller nexus and what date those went into effect. So there's a lot of things like that. Further down, there's some good videos, particularly dealing with South Dakota versus Wayfair. You've got, you can go out to our blogs or our FAQs, the Q&A forum. The other good thing about this page is there's a real nice tool that allows you to check your nexus. And I'd recommend everybody take a look at this. Essentially, the way this works, when you get into it, just check off the states where you're selling into. Okay, however many states there are. On the next page, it'll tell you what the laws are, if there are thresholds, what those are, effective dates, if they're SST member, or specific notes, and where to go get additional information and read the law. So this becomes a real good page for our customers to begin their research. Let me jump back over into the PowerPoint here. The other thing about this slide that I want to point out is you can see the states and when they started to go into effect. So you can see there were 4 states really that passed their laws and put them into effect only 10 days after the Supreme Court decision. And then the next big date is January 1st. Now, something to understand about the Supreme Court decision is that the Supreme Court really didn't decide anything. What the Supreme Court did, in this case, South Dakota versus Wayfair, was kick it back to the state to say, you decide, this is a states' rights issue. Now, effectively, there's a decision there because the courts in South Dakota had already determined that there was a nexus obligation there. And then with that decision, all the other states were able to say, well, if they can do it, we can do it. We'll pass laws that are very similar. And that's how this came to be earlier this summer. So all of that's happened. We've talked about a lot of complexities. You got to be sitting there saying, what do I do to stay compliant? Well, you need to understand the changing tax obligations. That's going to take some amount of research. It's going to take some systems and some processes to make sure that you remain compliant even after you understand those obligations. We recommend that if you've got a trusted state and local tax CPA or an attorney or a tax advisor to counsel you, that'd be a great starting point. But if you don't, we have an extensive directory of experts that you can contact, or you can even use our tax advisory services to determine where you have nexus and then work on other tax-related projects. There's a number of different resources you can reference on our web hub about South Dakota, the FAQ, the Economic Nexus Guide, videos, etc. We update it frequently. Give you an idea, I think on this white paper that came out, this map, if I can read it, this I think was effective as of June. So you can see how many states have passed laws just since June. Again, you can get to that page by going to www.avalara.com, click on the resources section, and then choose South Dakota versus Wayfair to get to that page. Now that's interesting. Try the return key. That time it worked. Okay, interesting. I have no idea what that error message was, but let's talk a little bit about the Avalara system. We think it's going to be less expensive for you to automate your compliance efforts than it would be to try to continue with a manual system. Okay. What should you look for in an automated tax system? That's really the question of the day. The Avalara Sales Tax Suite provides a cloud-based, end-to-end tax compliance solution. Now, there are some server-based systems that are on the market that you could, take advantage of. Server-based meaning you're loading the software and all the tables and all the rules on your server. But there's some maintenance and a lot of updating ramifications you need to consider with those. But by outsourcing your sales and use tax processes, you're going to achieve compliance, you'll cut costs, increase efficiencies, and you'll be able to focus on the more strategic initiatives important to the business. Now, AvaTax sits in the cloud between your order entry module and web store and billing systems, point of sale systems, all of that sits between those and the government. And in less than a third of a second, your systems are going to have an accurate tax calculation for hundreds of thousands of products across all 16,000 jurisdictions, taking into account the tax status of your buyer. What you need to do pretty much is set it and forget it. Now, Certs Capture is an exemption certificate management service. There is a version of Cert Capture Lite built into AvaTax, but the full system is much more robust. It manages, stores, and organizes customer tax exempt certificates. It has a built-in communication system that will reach out to your customers when things change or you need updates or certificates expire. And that means that you don't need to keep those documents in an accordion file or scan them into a system. We'll have them for you. The neat thing about Cert Capture is you can build campaigns that will automatically send off email or printed mail, if you'd rather go that way, advising your customers that you need to get an updated certificate and asking them to send it in to you, via email or fax, whatever they like to use. But they can also go out to a branded website we'll set up for you, where the customer then will go through a wizard, about 6 or 8 questions. Answer those questions. We'll pick the right form, present it on their screen, let them review it. They sign it with a mouse, and then one of two things will happen. If you're in an e-commerce environment, you would probably want that tax exempt certificate to be immediately available to your system, to your e-commerce web store, so that the sale that they're trying to finalize can go through without taxes. It's a nice little feature because they never need to leave your web store to go through that process. And then the tax exempt certificate's immediately available. More than likely, you might want to go through some sort of approval process, a little bit more control built into it that way. But at any rate, when you need to supply tax exempt certificates for your auditor, we keep them all online. They'll be available in your system. They'll be available in your browser. You can get them through your AvaTax console. But then at month end, you're going to want a company that can prepare and submit the tax returns, as well as provide treasury services to ensure that the returns are submitted, paid accurately, and on time. Now, there are some other systems out there, some signature ready systems where basically they'll send you a bunch of PDFs and you print them, sign them, put them in an envelope. You still need to produce the check recs for that. You need to get the checks printed, stuff the envelopes, or go online and fill out a form, and then make sure everything's done accurately. So we're more of a full service shop where we do all of that work for you. You'll probably also want a company that can provide some professional services or tax-based expertise deployed when you need it and how you need it. So we can help you out with audit defense, Nexus studies, product taxability studies, VDAs, backfiling, some other projects, basically so that you have a partner combined with a calculation engine that can provide support for your specific situation. This is custom tailored, and basically puts you in a position where you have your own dog in the fight. If you're running the Sage systems, let me tell you that we've had a relationship, we've had an OEM relationship with Sage for the last 10 years, but back in 2005, when we first started the company in '04, the Sage Mass 90 system was the second integration we ever built. We've been with Sage ever since. We're real proud. We support all of the Sage product lines, and it's complete tight integration. There's not going to be any change to your workflows. So the people who are working in the Sage order entry system or the invoicing system or billing, they continue to work within Sage. There's no change to the workflow. We've got over 1,600 customers running Avalara that are using Sage ERPs, and everything is maintained by us. It's good, tight integration and a real good, it's been a good relationship. Little bit about us. We talked a couple of times. We've been in business for almost 15 years now. We did an initial public offering in June of this year, and that was a lot of fun. That was great. We bring on probably more new customers every month, I would bet, than all of our competitors combined. It's an old slide you're looking at now, but we're approaching 650 connectors or pre-built integrations. This year, we expect to do 7 billion tax transactions. We'll manage 18 million exemption certificates, and we'll remit over $30 billion in taxes for our customers. 1,500 employees worldwide on 4 continents. And I think the most important stat is further down a little bit where it says industry first accuracy guarantee. We were the first company in the industry to absolutely guarantee the accuracy of our calculations. Now, since that time, one other company has introduced an accuracy guarantee, and I don't see how they can do it. I mean, they haven't built the content. They're a younger company than we are, and they haven't yet built content for all of the different industries that are necessary. So if you're selling, copybooks and baseball cards, you're probably okay with the lower end system. But if you're in any of the more complex environments, I don't see how they can offer that. But we still do, and we're real proud of it. So with all of that, I want to thank everybody for coming. We can arrange for demonstrations for you if you like. I'd recommend you get a hold of Gia or Mike or one of your other RKL reps. They'll be able to set up some demonstrations and dig further in and answer some other questions you might have. But at this point, let me go back to Laura and ask if there are any questions maybe that got put into the chat box, or if you have any questions, please put them in now and we can address them while we're all here.
Okay, so we did get something from Joel. He asks, if a state has a transaction or dollar limit where you then become liable for the tax, do you need to go back and collect sales tax on sales prior to hitting the threshold or just after? For example, I hit a 200 sales transaction limit in a state and do not believe that I will hit that limit, so I do not collect sales taxes. Then I have a surge of sales and exceed the limit. Do I need to go back and either collect or report taxes for transaction 1 to 200 or just from 201 on?
Joel, that's a great question. One of the reasons the Supreme Court, quote, agreed with South Dakota and disagreed with some other rulings in the past was because South Dakota built into their legislation the fact that previous sales were not going to be back taxed. So in the South Dakota case, the law reads, when you hit the number going forward, that's when you'll need to collect taxes. Now, that said, there's 45 states plus the District of Columbia that collect tax. There's probably 28 of them now that have economic nexus laws, and I'm sure most of the rest will very shortly. They're all kind of following the lead of South Dakota, but they don't have to. So at this point, what I can tell you is I think you're probably okay by registering and collecting going forward, but I would absolutely recommend that you check with your SALT your state and local tax advisors first, or else go out onto our website and see if there's some information there for the specific state that you have in mind. Good question.
Joel also wanted to clarify that he says for South Dakota, I'm assuming the amounts and transactions are within a year and not in total over multiple years.
Good question, and that I'm not sure of. I think South Dakota is looking at a rolling 12-month year, but it could be last year, and I'm not sure of that. Again, I know that that's covered on our website, so it is a 1-year period. My question that I don't know, is it last year or is it a rolling 12 months? But I'm sure that's out there. Actually, we can find out for you, Joel, if you wouldn't mind shooting me an email with that question. I'd be happy to get the answer for you.
So, Tom, how about states not on your map? Are there any imposing similar laws? And if so, when do they go to effect?
Most of the states that have not already passed laws. I think the map, okay, so the map took us up to October 4th. And then there were also 5 or 6 states that were listed that were going to start in January or in December of this year. So those states have already passed laws and they're going into effect. We know South Dakota will take it into effect, but we don't know when. In most of the other states, they're talking about it, they're discussing it, but they haven't, and in some cases the legislation process has started, but there's really no indication when it's going to get through the state houses and what comes out of the house when the process is done.
Okay. And what types of companies would be impacted by South Dakota's economic nexus law?
Wow, pretty much all companies. That's another good question. Any company that sells into South Dakota, whether that has not conceded Nexus to South Dakota, is going to be impacted by this. So you could be selling over the internet in an e-commerce web store. You could be a catalog company. You could have affiliate sellers selling your product for you in state. If you hit those thresholds, no matter what it is you sell, then you're going to be obligated to register to collect the tax. The next question that usually comes up after that is, well, my stuff is tax exempt, so I don't have to worry about it, right? And I believe the answer to that question is no, you do have to worry about it, or yes, you do have to worry about it. So if the threshold is there, let's say $200,000 a year, it's a revenue threshold. Doesn't matter to the state what the tax was that was collected. If you hit the revenue threshold, they're going to expect you to concede Nexus. Now, even if your sales are tax exempt, what that does is that puts you in a position where you need to collect, in this case, no sales tax, but still do a $0 report at the end of the period for the state. And then if products that you bring on in the future are taxable, then you'll need to collect the tax on those products. That was a long-winded answer. I hope it answered the question.
I think so. Those are all the questions that I have. If anybody else has a question, go ahead and type it into the chat now. Otherwise, Tom, if you have any closing remarks.
Well, the closing remarks would be to bring your questions to the RKL contacts that you have, Mike Scher, Gia, and the rest of the team. RKL Solutions is a great organization. We have an outstanding relationship with them. They're probably going to call me or somebody on my team, and we'll get you the answers. And, you know, if you wanted to see a demo of the product, let us know. We'd love to take that offline with you. So with that, I want to thank everybody for the time. I hope you found it a valuable use of your time, and I would look forward to working with everyone.
Thanks so much, Tom.
Thank you.
And thank you, everybody, for joining us today.